Joining me today is Colin Jessup from OmegaTrader.ca. Colin, thanks for joining us.
Thanks for having me, Smeet.
I guess the first question I like to ask all the traders that take the time to join us is, how did you get started into trading? How did this sort of become your life path?
Actually, when I was involved in corporate, and actually I was involved in logistics and warehousing. When I stumbled across trading, a friend of mine actually came to me and said, this life is kind of boring. Why don't we look at doing something else? And he introduced me to Forex to begin with, um, which through circumstances, we ended up becoming roommates, and which kind of accelerated the whole camaraderie thing as far as trading goes. And so we did Forex to start with. Then we did a short stint in futures, and then returned to Forex, and I've been concentrating on Forex ever since.
And so how long has this been? When did you first get started?
This we actually started, first would have been 2004, roughly 2004, 2005, in that range somewhere.
Okay, so we're talking about 9 years ago. And I guess
Yep.
what was the learning process like? How long did it take you to get to a point where you were like, I can do this. This is working for me. You had the edge in the market that you were looking for. How long was the pain period, so to speak?
Um, it was quite long, actually. I made all the same mistakes that most traders make in the beginning, which is jumping from system to system, and reading every website, every book available, kind of thing, trying to figure out an edge. But it really clicked for me about 3 years later, after going through that phase. In about 2008, I stumbled across my now mentor's website, and began focusing on simply just on price action. And that was when the tables turned for me. Once I really understood price action, what it meant, how price moved, um, everything else started to click at that point. So it took me 3 to 4 years before I finally started to become, what I consider truly profitable.
Do you think if you had sort of found price action earlier, do you think that would have saved your learning curve significantly, or do you think some of that was just you gotta go through it and learn the hard way? So
I think it's kind of it's hard to say, but I think if I hadn't gone through some of those struggles in the beginning, I don't think I would have realized just how important price action was when I came across price action as in naked trading sort of thing. I think it's kind of like in Canada, freshmen or university students spend a year in arts and sciences before they can specialize. And basically, that's to get the party and everything out of their system. And I think that those first 3 years for me was kind of the same.
So are you just using price action, or are you using moving average indicators at all, or is it totally just the chart?
I use a combination. I do swing trading and I do intraday trading. Swing trading is it's about 90% price action. On the swing trading, I stick to pretty much price action and support and resistance. And then intraday, lower time frames, 15-minute, even some 5 minutes sometimes. I like to put moving averages on my charts, and a stochastic just to kind of give me a little more confirmation that what I'm seeing. And that's simply because I find the lower time frame price action, the candles that form and so on, just aren't quite as solid as you would as candles that print on daily or weekly charts.
So now, in terms of price action trading, a lot of for people watching this and may not be familiar, price action trading is basically without any technical indicators, just observing the price patterns on the chart. So when we say price action trading, it's basically what we're referring to. Now, Colin, with your approach, do you look at, for instance, like textbook patterns? Does that factor in, or Fibonacci? Some price action just for resistance and candlesticks. What around price action? What's sort of your tool set that you're working with?
I concentrate mostly on candle patterns, and for the most part, I concentrate on only two. I look for mostly engulfing candles, which is a candle that is much bigger than the candle on the left. And I also prefer the pin bar setup, sometimes referred to as a hangman, or a hammer. I know people that actually call them kangaroo tails, or a version of them. So those, as far as price action goes, those are really my go-to setups, if you will. And then there's a few others, but what I've done is I've decided to specialize in only one or two or three setups over a number of charts. Like I look at about 26 different daily charts at the end of every day, whereas my intraday stuff, I focus on basically multiple patterns and a small number of charts. So intraday, I'm only trading 4, maybe 6 pairs. Long term, I'm trading 26.
So you mentioned it after the daily candle is formed. Could you sort of give us a rundown of what your daily routine is like? Do you have sort of a very regimented plan, or does it vary a lot day to day? What's sort of a day in your trading routine like?
For me, basically, the first thing I do every day is get up and look at the charts. Because I trade a live London session, I intraday trade during the London session. And here in Canada, that gives me a work day of my work day ends at about 3 in the morning. So what I do is I typically sleep until late morning or early afternoon. I go about my daily business as anyone would, and then at about 3, 4, 5 o'clock, when the New York candles close, when the New York market closes, I start going over the charts at that point. Sometimes it's a little later, sometimes it's earlier. But at that time, once the daily candles have closed, I go over all the charts. I look for patterns. I do sometimes add some Fibonacci levels, for example, and try to identify any possible setups for basically the next day. And then I go about, I go into the regular part of my life, which is the business of Forex, and I provide articles to Daily Forex, for example, and I provide videos, video analysis to some programs, and so that takes up a bit of time, and then I usually take a break and come back to the charts with about 2 hours before the London Open.
So now you've mentioned that you trade the London Open. That's a key part of your intraday trading strategy, and you've been relying on the hammer, hangman, and the engulfing candlesticks.
Yeah.
These strategies have you been? I'm assuming it sounds like they've been working for you for years now. Do you anticipate them to continue to work, or do you think there's any chance these strategies are going to become obsolete, or is this price action it's going to keep working?
Well, I think it depends on the time frame. Like for example, a 15-minute hammer is not going to be, in my opinion, it's not going to be as reliable as a 4-hour hammer. But I don't think you'll ever get away from price action being relevant. Price action is just simply a good indication. If you learn to read price action, you learn to read where the markets are potentially going and when they're going to start that move in that direction. So I think that price action is never going to change itself, really, but the markets do change. And for example, in 2010, 2000, early 2011, we were getting daily hammers and pin bars on a regular basis, and the daily setups were doing extremely well because the markets were trending much better than they are now. So in late 2012, 2013, I find that those daily patterns aren't quite as reliable, and mostly it's because I don't find we're getting as many of them. Whereas 4 hour and 1 hour we're getting more because range is tighter on a lot of the pairs right now.
Do you anticipate that? Do you think that's just a symptom of a larger cycle? For instance, do you think in a few years from now the daily chart may have more opportunities for you, or do you think this is a trend and we're going to stay on it towards the shorter time frames?
I think inevitably it's inevitable that we will break out of this sort of a consolidation phase, if you will. If you follow the markets at all, you know that a lot of the big banks and a lot of the governments around the world are trying to manipulate their economies in order to, basically it's a currency war, if you will, that's caused the markets to kind of be stuck in a range. And this won't go on forever. I mean, it's just like any other financial cycle. We will get out of it, and I've heard from people who study Elliott wave, for example, that now we're in wave 3 or whatever. But really, what it comes down to is the market simply can't sustain where they are right now. Either one way or the other. For example, either the U.S. economy is going to the U.S. economy, for example, and the European economies are going to improve eventually. So it's just a matter of when are we going to break out of this cycle is the question. It's not a matter of if. And I think at that point,
and then
we're going to see a lot better, a return to longer term trends.
Okay. Now, in terms of risk management, we've talked about price action trading. Obviously, correctly analyzing price is a huge part of trading in terms of getting the proper entry and exit signals. In terms of risk management, though, with your approach, is there a certain win rate you're targeting, a certain reward risk you're targeting, or how do you what's your sort of basic philosophy towards risk management?
Risk management for swing trades, I typically enter 1 to 2% per trade. I try to keep it at 2% per trade, but sometimes instinct or whatever will kick in, and I won't quite feel comfortable with putting a full 2% on it. Oddly enough, sometimes those turn out to be the best trades, but I do try to keep my risk. I never risk more than 2% on any trade. Intraday, I typically risk less. I'm risking less on a smaller stop actually than I would say on a daily swing trade, and but I always fall within the same parameters. For example, on an intraday trade, I might stick to 1% as a maximum. And then as far as targets go, I really on the swing stuff, I really like to go for a true 1-to-1, and then at least 2, maybe 3-to-1, but those are pretty long-term trades. And then intraday, sometimes it's 20 pips and get out. It's kind of wherever my comfort level takes me.
Yeah. So you mentioned you're risking 2% per trade. So how many trades might you have on concurrently? So I guess what's the maximum risk your account is if you were fully exposed in your account?
I think the absolute most would be about 5 trades at one time. If I had 10% of my account at risk over 5 trades, that would be my cutoff. I would not want to draw my account down more than 10% in any one day, that's for sure.
Sure. In terms of the psychology of trading, or losing streaks, do they come up, and sort of how do you sort of deal with losing streaks? What do you think of keeping a journal? Is that something you tried, or something that has helped you at all? In terms of, I guess, thoughts on psychology.
Well, interesting enough, this has been a bit of a difficult year, and this has actually, been one of my toughest years since I started trading, and I think that it's contributed a lot to some of the factors I've already mentioned. But losing streaks do happen. It doesn't matter who you are as a trader. It doesn't matter whether you're trading for a day or 10 years. You will have losing streaks. It's just the nature of trading. It's the same with trading isn't gambling, but I guess you can. That's one way you can compare the two in this instance. What I do is I try to take a screenshot of every trade I take, and then write the parameters down, uh, and then go back to the trade and determine whether, if for example the trade didn't work out, I can go back to a screenshot of that original setup and say, okay, did this actually meet my parameters or not? And absolutely, each person, I think a trader should keep a journal. And if that's just how I keep my journal, which works for me.
Sure, sure. In terms of your actual chart setup, are you looking at, is there multi-time frame analysis? Does that factor in at all? Or are you just sort of looking at, if you're trading off the 15-minute chart, that's all you're focused on? I guess, do you have just one monitor, or are there a bunch of different monitors? What's sort of the visual setup like?
Well, I look at all different time frames. When I'm trading the intraday stuff, I typically look at, I start the day by looking at the daily chart, but when I'm trading intraday, I typically have, a 1 hour chart and say a 15-minute chart side by side, or a 15-minute and a 5, something like that. And I take into account all the time frames basically at all times. I think I've got 6 or 7 monitors right now. Each monitor is split into 6 different charts. So I've got a lot of information coming at me all at one time. And there was a time when I felt one screen and one chart and one time frame was enough, but it seems as my career has progressed, I keep spreading out more and more charts all the time.
Sure. In terms of fundamentals or news feeds, are you looking at any of that stuff, or is that just completely filtered out and you're focused just on the price?
It's really hard not to be influenced by the fundamentals sometimes, because we're just bombarded with information nowadays. But as far as trading goes, it's really best to put it out of your mind and focus on the technicals. I find that if I get too caught up in the fundamentals, it affects my technical trading. So I really do try to just stick to the technicals. And occasionally I'll read another trader's blog or something that will, just somebody who's similar trading style to me, just to see, if they're on the same page as me, or maybe I missed something. But for the most part, it's really, really important to just stick to the fundamentals. Stick to the technicals if you're a technical trader.
Now as you know, trading can be it's pretty liberating in a way. You can sort of set your own hours and work from home and do what you like. Of course, that can also be a bit isolating at times. Is there something you do to deal with the solitary aspect? That can, of course, impact your psychology, or do you prefer that to sort of be in complete isolation and think come to your own conclusions that way?
Yeah, trading is definitely a solitary endeavor. I've found ways to work with that. I have a small Skype trading group that we keep open. There's only 6 or 8 of us in it, and it's just people that I know from the trading industry. We keep a Skype group open and chat back and forth during market hours. And these guys are all over the world, so there can be information there at any given time. We also, my trading partner and I, that's one of the reasons we teamed up and started our Forex, our live trading room. A lot of the reason behind starting that live trading room was simply the social aspect of it. Our eventual goal is more of an online trading. We want to create a trading community, a live trading community, rather than just we're dictating the trades. We would love to take our concept to the point where everybody logs in and we discuss trades rather than just there's a lot of trading rooms out there where you log in and you just follow the guy and that's all there is to it. So we're trying to do a little bit something different and really focus on that social aspect of things.
And speaking of which, I know you have a number of services, OmegaTrader.ca. Tell us about some of the services that you offer for for people looking to learn to trade and other services?
Well, our main service is actually the forexroom.com, and that's our live trading room. Through that, I offer we offer the London session right now, and we also offer swing trading opportunities, which I send out in a video form at the end of every day. And I work with Walter at FX Jake on the Daily Trader program that he has. I believe you've interviewed him in the past as well.
Yes.
And we also have a capital management team called Omega Capital Management, which we're just in the process of changing over. OmegaTrader.ca is going to become simply a capital management site, and all of the education stuff will be going through the forexroom.com. And then, of course, we've got the token Facebook pages for everything, and Google and all that. So we're well covered. If I think if someone just did a Google search, it wouldn't take them much to find us.
Sure. Colin, thanks a lot for taking the time to join us. For folks who want to follow Colin, you can follow him, as you mentioned, the forexroom.com. Colin, thanks a lot for joining us.
Hey, thanks a lot, Smeet. Have a great day.
Take care.
Take care.